what do you say, Vic? It's 10:03 in BC, 1:03 in the East. Should we get going?
I say go for it. That's my motto.
Okay, excellent. Well, thank you everybody for joining us this morning or this afternoon. I have the pleasure of hosting the banking webinar today with three fine gentlemen and speakers, and I'll be introducing them each individually. And once again, we do thank all the advisors for taking the time out of your busy day to join us today. Those of you that I have not met, I'm Alex Chan, the Regional Wealth Leader for Western Canada at IDC Worldsource, part of the Banking and Wealth team, which Vic Raye is part of, Graham Allan in Ontario, and of course the Head of Wealth and Banking, Jason Payne, out of Halifax. So I'll kick it off today to welcome our first speaker. And many of you know Vic Raye, our head of banking. And Vic's going to talk a little bit about how banking can enhance every advisor's practice. And Vic is based out of Vancouver, BC, but he looks after all of Canada. And he's been with us for the last 4 years and doing a great job. And again, very integral part of our banking and wealth team. Vic has 30 years experience working in banking, securities, and mutual funds. And Vic is originally from Toronto, but we've accepted him here in BC now. And where he earned a Bachelor of Commerce from the U of T. And many advisors at IDC Wind have leveraged Vic's skills and also his passion to generate new revenue growth from two core areas, and that's market lending and deposit instruments. And he's been doing a fine job. So please welcome me in welcoming Vic Raye, our Head of Banking Services. So over to you, Vic.
Alex, thank you. Hi, everyone. Let me just jump right in. This is by far the easiest presentation I have ever had to prepare for. And I mean that both in terms of my own comments today that I'll be making, as well as who I wanted to be with me on this call today, along with, so of course, I'm referring to Alex, who did the fine intro. Thank you again for that. I'm blushing, as well as MyChal Ferreira from BMO and Allan McNeil from Equitable Bank. Now, why do I say it's the easiest presentation that I've ever had to prepare for? The client need and the advisor opportunity are just so great in banking right now. The appeal of banking as a practice management strategy does not get much better than in today's higher rate environment on both the lending and the deposit sides. So just let's look at the mortgage side for a moment. In the early part of 2022, January 2022, Q1, with prime at 2.45, historic lows in modern history for mortgages, there wasn't a lot of concern about the rate you're getting. There wasn't even a lot of, frankly, shopping around. People would just walk into their bank upon a week before renewal, or if they had to refinance, and there was minimal need to shop around. The rates were just too good to be true. And that applied to purchases as well. So today, we're looking at prime of 6.70. And it's not so much that that's a super high number, but the rapid increase is unprecedented. So anyone and everyone with any type of lending and mortgage as well, whether it's on the principal residence, investment property, recreational property, everyone is going to be shopping around like they've never shopped around before. And I think that's going to be the key. They can't walk in a week or two before and expect to get a great deal. So the story I'm going to just share with you is just pretend you're going into a car dealer. You walk in and you just say to the first person, salesperson you see, wow, I got to have this car. I absolutely need this car today. I've loved this car for so long. I absolutely need to get this car. What kind of a price? How much negotiation do you think the dealer is going to give you on that car? You're probably going to walk out paying more than sticker price if you go in with that kind of a position, starting position. Yet but believe me, people will do that with their mortgage. When it comes up for renewal or if they have to refinance, they will wait until the last minute. So we really have to help them to prepare. And that's a really simple thing to be able to do. All you have to say is something like, I have bankers reaching out to me, competing for the mortgage referrals in my practice. Would you like me to set up an intro for you? And I'll bet you dollars to donuts, you're going to have a huge response to that. We also have 2 great letters on the IDC Win website that you can use. The wording in there has not changed in almost the 4 years since we created them. And that says a lot about me because I change everything. I edit everything. And those 2 letters have not been touched. The wording in there is fantastic for you to use in your own emails, in your own newsletters, to help position the concept that you have a great network of bankers that your clients can tap into. What's the risk? I don't see any risk here. The worst that can happen, given where rates are today, is that someone will say, hey, you know what? Thank you very much for putting me in touch with either BMO or Equitable or Manulife. They were very competitive, but in the end, I ended up staying with my current bank and they helped me get a really good rate there. You still look good. You still look fantastic. And that client will be a source of tremendous referrals for you going forward. Because as we all know, mortgages are one of the most referred and shared and talked about financial products out there. So let's just talk a little bit more now, a little bit about banking and helping you prospect, because I just touched on that through referrals. Things have changed so much here. I honestly can't believe, Alex mentioned 30 years. Well, it wasn't that long ago where we could all cold call. Cold calling was actually fun back in the day, and some of you who've been in the business for 10 years or less are going to laugh, but, you could actually call people on the phone at their homes. People would actually answer the phone. They didn't let it go to voicemail. They thought it might be important. They answered the phone. When they heard that you were a professional, they actually talked to you. They spoke. You actually got meetings. You went and saw them at their homes. It was really a lot of fun, I have to say. Now, we can't do that anymore. But banking can help you prospect. We can use banking to replace that massive opportunity to help you grow your practices. And again, it's because of the fact that banking is a consumer product. It is a retail product. People are able to just buy it, as opposed to the adage in our industry that insurance and investments tend to be sold. Banking is bought. So it means it's referable, it's shareable, and you can leverage that in terms of even new clients as well when they think back and go, wow, you know what? I'm going to go with you because you offered to introduce me to your network of bankers. And that's very important today. The other last analogy I'll leave to you in terms of, well, what's the risk? Well, I just don't see it. It's like offering banking, offering mortgages in particular. It's like a bowl of fruit that you see when you walk into a fine hotel and you're checking in and there's a nice bowl of apples and the nice flavored water with the lime in it or the orange. You can either take it or not. It's entirely up to the client. And that's the beauty of banking. It's just being able to offer it. So you're really not sticking your neck out on anything other than allowing your clients to tap into your fine network of amazing bank partners. Now, before I move along and turn things over to McNeil and Allan, I'm just going to talk a little bit about the Advantage account. Manulife Bank is not here on this call today. As I mentioned, I had a very specific purpose for this call, and that's why I wanted to have BMO and Equitable Bank on this call. We will hopefully have a call with Manulife Bank a little later, and it will hopefully then also revolve around their Advantage account promo. If you haven't done so already, I will beg, if I have to, that you reach out to your Manulife Bank wholesaler and ask them for your personal Advantage account link, your URL, so that you can send that out to as many clients as you wish. It can be a select number of key business owners, or it can be everybody in your client base, all of your prospects. You can send it to anybody you like. There's no restriction on that from a compliance standpoint. And when that promo is announced, we're expecting it to be sometime this summer. You can call them up and say, hey, I can get you this great rate for the next 5 months. You want me to send you the link? And people with money love that sort of thing. And then the beauty of what Manulife Bank has done here, and I actually, if this sounds like a commercial for Manulife Bank Advantage account, so be it. This is a unique signature product, unlike anything in the industry, where you can be named as the advisor of record on a operating Canadian Schedule I bank account, meaning that in my clients, when you log into my clients to check out your policies and all your other Manulife business, you can do a sort and you can see all the clients with their balances. So who would you rather call? 10 people with 100,000, 200,000, 300,000 who are in a good mood, or just people in general? I think it's an amazing opportunity. And it's one that I am convinced that if we can have more opportunities where we're talking to people with cash who we know have large cash, that'll lead to great things both on the insurance side and on the seg fund side. Now, also, however, again, this is more of a retail approach here. There is the Business Advantage account. They also have promos on that. They have in the past. They're usually in the fall. So if you're active in the corporate insurance market, what better way to get the edge over your competition than to be able to offer a special promo rate on a Business Advantage account for the actual corporate assets, that short-term cash that may be held within a business. We've got many stories, and I'm not even doing it half the justice that I should by going through it as quickly as I have here. But we see the numbers, we see the people who are using them. Some of our top advisors across the country do this day in and day out, and we believe that's why they're so successful. All right, so before I now for sure turn things over to Alex, I just want to say a few words again about why MyChal Ferreira is here and why Allan McNeil is here. The presentation that MyChal is going to share with you is the presentation that essentially he would use if he was presenting to you as an advisor as to why you would want to work with him. So he works with our advisors primarily in BC. We've built up a really great network. We have, so those of you in Ontario, we have Peter Van Slyteman, MBA CFA. What an amazing thing that would be to put in front of your clients if you're in Ontario. Hugh Calderwood down in Southwestern Ontario. Marcia Reed in Calgary, or Tina Dahl in Edmonton. These are all superb people. We've gone with Michael because we want to just show you how easy this is to prep your clients and the role he can play. He's an absolutely superb presenter, and I'm looking forward to hearing his presentation. Following that will be Allan McNeil. The story that I'll share with you here is really awesome. He's going to talk about reverse mortgages and the need to get a second opinion, because the dominant player in this field for many years has been CHIP. And they carry all the baggage and all the stigma of reverse mortgages, hopefully on their brand. This is a new brand that we can bring in, that you can bring into your clients. And the story is one that Alex Chan himself shared with me. Alex is actually, as you may know, has his own small client base. He's been referring mortgages. One day, about 2 months ago, or not even, he walked out of his front door. His gardener was there working. They have a 60-second conversation. It ends up as a referral for a reverse mortgage to Allan McNeil. I mean, how easy is that? So, Alex, has actually probably perfected the process of a referral better than anyone I know. He lets the dogs out in the morning. He can probably do a referral in the 60 seconds it takes to get them back. He takes a mid-morning break, get a cup of coffee. He can probably do another mortgage referral in the 60 seconds that takes. And it literally took him 60 seconds to introduce his landscaper to Allan McNeil, Equitable Bank. So without any further comments from me, Alex, I'd like to turn it back over to you to introduce MyChal.
Well, thanks, Vic, for actually sharing that story. And I think the moral of that story is, we're so busy in what we do. Both Vic and I probably work 60 hours a week with IDC Worldsource, yet it just takes 30 seconds, 60 seconds to talk to people and hand them off to BMO or Equitable Bank. So thanks for that, Vic. And, that was a great, I would call it off the cuff with Vic Raye. So I think we should actually create some podcasts and have Vic talk to the group. So thank you for that. And actually, Vic is actually right on time. Use this 20 minutes to the minute. So without further ado, it's my pleasure to introduce our next speaker, MyChal Ferreira. And McNeil is a top performer nationally, helping advisors and clients through simple preparation. And as Vic mentioned, that's what his talk is about today. McNeil is a highly accomplished mortgage specialist with an impressive 15-year track record in the industry. So you can feel very confident referring McNeil. He's a leader at his company, BMO, with a dedicated team of 3 associates. And I think the first time I met with MyChal, I even asked him, well, what's the language capability? And I was stunned because it's actually Mandarin, Cantonese, Shanghainese, Spanish, Portuguese, and French. So I think MyChal and his team are very well equipped to handle all referrals. Together, they have consistently ranked among the top 1% of mortgage specialists in Canada. And actually at BMO, MyChal and his team, they're the #1 team for the past 3 consecutive years at BMO. And that's one of the reasons why Vic chose MyChal to handle the referrals in BC. So again, his exceptional performance and unwavering commitment to excellence have cemented his reputation as an industry leader. And MyChal looks forward to working with everybody on this call, and of course, those in BC primarily. So MyChal, over to you. Thank you.
Thank you so much. I appreciate that, and really excited to be here today and present. So I'll just share my screen. Okay, so basically, I'm here today just to kind of recap a little bit about what I do and the opportunities between IDC and Bank of Montreal. It's funny, we really started to get this going just over a year ago, myself with one particular advisor. And, we started to just look through opportunities between both parties here. And, it really started to move. So I wanted to really share some successes and some of the ideas and processes. So as Alex mentioned, obviously I've been with the Bank of Montreal for over 15 years. We have a proficient set of languages that we can accommodate. And we've been lucky enough to be one of the top ranked teams in Canada. Last 3 years, #1. And, I attribute that to myself and my team always making ourselves available to both advisors and our clients 24/7, 365. So, that is one of the things that really led me in my career, and I continue to follow to a T, and making sure that clients are #1. So, one of the things when you're looking at Bank of Montreal and this particular program, what is the program? How does it work? How do you refer to me, right? So essentially what we look at is, we are an exclusive banking partner. We are a one-stop home financing shop. And essentially we can do everything from new purchases, refinances, renewals, equity takeouts, debt consolidation, whatever it may be. As long as there's a home involved, we're able to do that. We're able to do deals across Canada. Of course, there's specific partners in each province, but NEMS can help anybody across Canada. In my opinion, one of the most valuable parts of this program is the non-solicitation. And, I'm hearing all the things you guys are doing for your clients, all the planning that you're doing. And I think it's very, very important to ensure that you don't have anybody else trying to, change these plans or, provide additional products that may not be suitable for your clients. So with a non-solicit, basically what happens is we take on the mortgage, we bring it to BMO, and we put a big alert saying that we are not to advise the clients on any investments, insurance, which basically protects any plans that you have in place. And of course, one of the best parts about it is that we will actually pay you for the referral. So you can earn up to 32 basis points for every mortgage referral that closes. And just to give you some, BC numbers, because everything here is $1 million, but $1 million mortgage referral would pay you about $3,200 in commission. So, one of the things we're talking about today is just like, how do we identify these opportunities? How can we look at ways to make these referrals? And, it's not that difficult, because most people who are homeowners will have some need at some point. And as an advisor, I think you're, looking at their whole financial situation. And if you see that they have a mortgage, when is it renewing? If it's renewing this year, it's always great to get ahead of it and connect me so that we can chat about that, because basically we can do renewals up to 130 days and hold a rate 130 days before maturity, which is industry leading. Well, another thing that a lot of clients and a lot of people in general don't know is that we can actually do pre-sale mortgages. And, that's more common, I would say, in parts of Alberta and BC and in Ontario. But if you've bought a pre-sale construction home, whether that's a condo, a townhome, or a detached home, and the project is completed within 3 years, we can hold a rate, hold an approval, and basically order an appraisal at the time of the mortgage application, so that you are 100% completed on the file. So regardless of what happens between the day that we started and the day that you complete, you don't have to worry. Everything is done. What we do is we hold a capped rate, which essentially protects the client in case rates go up further, which go back a year, our capped rates on these pre-sale mortgages was like 2.5%, where you can imagine today they're at about 5%. So another one is, our clients looking at getting pre-approved? Are they first-time home buyers? Are they looking at a rental home, maybe a vacation home? Maybe they want to pull out equity to consolidate some debt, or perhaps invest, right? There's multiple ways that we can help, but anything mortgage related is a great way to just connect me and see how I can help. I really like to mention that, I am 100% commissioned. So, I'm driven by helping clients. I want to make sure that everything gets done. I'm not a salaried employee. So, the more I take on, the more I want to do. So, I don't have capacity issues because, as Alex mentioned, there's a team, there's 4 of us in total. So we always are able to meet up, keep up with demand. And you don't need to explain anything to the client. You don't need to get into specific details about rates and products. It's just, if you understand that there is a need, it's extremely easy. All you have to do is connect me by email, or reach out to me and give me the client's details, and I can give them a call. So there's no complicated referral process. It's literally just connect client to me, and I will do the rest. From there, we tag the individual advisor, make sure that you're registered with Bank of Montreal. And then, it's a simple process from there. Another thing that's really important is that I'm extremely competitive on rates. I rarely lose deals to rates. Because of the volume that I do have a direct line to accessing better rates than most advisors at Bank of Montreal and just in general out there. And one of the things that we've seen happen over the last little bit here is there's certain players in the mortgage industry that have suddenly backed out. So, if you have clients in like Scotiabank, for instance, they've decided that they're kind of stepping away from doing mortgages and then trying to bleed the book. And, all of their rates are, posted rates that they're offering customers. So in general, we want to make sure that we're providing value for your customer. And I will never take on a client if I can't add value. If the client is getting a better deal and has a better product, whatever it may be, I won't advise them to come with us just for the sake of it. If I can add value, then I certainly will help them. So just touching on a few of the different products here, which I think it's important to understand just as an overhead. Basically, we do conventional mortgages, of course, standard one loan product. And with that, we do have a unique part of our conventional mortgages that no other institution has. It's called the mortgage cash account. So anytime that you've prepaid a mortgage, you add a lump sum, increase your payment, that actually goes to a separate account, which is called the mortgage cash account, which can be withdrawn at the same rate at any point in the term. So for instance, if you've had a client who's had a 1.69% 5-year fixed, and they've put all this extra money into the mortgage, they can re-borrow that money at 1.69%. And this is just a standard conventional mortgage. It's not a readvanceable mortgage. So even our regular mortgages are, best in class. The other product is a homeowner ready line of credit, which is essentially a mortgage product and a line of credit mixed together. This is the most common, product that you see out there. RBC Home Line, Scotia Step. It's all kind of the same idea. The nice thing about us is we can go up to 80% of the value of the home, with 65% being in the line of credit. We can do fixed variable rates up to 30 years. We can have multiple borrowers. And one of the very useful things about this particular product is I find that clients sometimes want to take a chunk out of their home and invest it. So we can actually say if they had $200,000 available in the line of credit, we can segment that 200, and then that would allow the investment to be completely separate. So from a tax perspective, we can help with all that kind of planning. Last is the homeowner line of credit, which is becoming a lot more valuable these days. And it's just simply a line of credit at prime plus a half or prime, depending on the client. And when you borrow from it, it's you pay interest only. And the reason why this particular product is becoming more useful today is because obviously in the last couple of years, we've seen historically low rates, and nobody wants to pay out those mortgages. Why would you pay a penalty and close a mortgage that's, south of 2% when you have all this equity and you want to tap into it? Well, this allows you to do that. Say you have a mortgage with Bank of Montreal or any other lender in first position, and you have all this equity you want to access. We can do a line of credit in second position to that mortgage, equating to a total of 80% of the value of the home. So this allows you to access the equity without touching that first mortgage with that amazing rate. So as you can see, we really have a solution for every client in every facet. It doesn't matter what it is. We want to add value and make sure that the benefit is there. A few of the programs that I think are important to understand with Bank of Montreal, which some are very unique to Bank of Montreal. One of the most unique products that we have it's called the Canadian Defence Community Banking Program. And essentially, we are the bank for the Canadian defense community. So RCMP, military, police, we can actually, provide extremely competitive rates, which are essentially staff rates, provide free banking and multiple other things. And because if they are in the military and they get posted somewhere else, we will cover their penalties in full. So if you know anybody in the field, this should be where they bank. This should be where they do their mortgages. We just give them every benefit there is over and above everybody. BMO Savers Advantage is a net worth program that we have. So, I would say the ideal client for this is basically someone who is retired or has significant assets, but maybe minimal income, but wants to borrow money or wants to, give their kids a big chunk of down payment. Well, we can basically lend on a 1-to-1 ratio. Say they only make CPP or a small pension. Well, but they got $1 million. Well, we'll lend them $1 million on their home based on their assets. Okay. Obviously, there's all the first-time home buyer incentives, including the loan program that we have. New professional program is also great. It's for brand new dentists, doctors, and we can project incomes of up to $300,000 in their first few years. New to Canada is another really important piece given all the immigration we're seeing. We can use foreign income to help support debt servicing, and we can lend up to 80% in certain circumstances. Of course, the builder program I touched on, it's a pre-sale program, which allows us to do financing for up to 3 years in advance, hold a rate 3 years in advance, and approval 3 years in advance, okay? So again, I just wanted to quickly do a quick overview of the Savers Advantage program. I won't talk too much about this slide, but essentially this just shows like you can do 20% down. You need to have satisfactory credit and you need to have $150,000 in liquid assets to be qualified for the program. Again, great tool for clients who are retired, trying to help their kids or want to, invest. Trapped equity is, something that we see all the time. And, this allows you to get stellar rates, accessing your equity, by not having to go to perhaps an alternative lender and paying a substantially higher rate. And again, just the builder program, a little bit more detail there. And essentially, the most important piece here is just knowing that you can get approved for any pre-sale that you buy. The reason I'm hammering this one so much is just because we're seeing such a huge impact with these. And, last year, I have many clients who had bought pre-sales, arguably at the peak of the market. So they paid a premium, but they also got an extremely low rate that's saved. If they did none of that, here's the risk to them. Essentially, the market has declined, rates have increased. So their appraisals are coming in short if they haven't done this, which means now they have to cover even more of a down payment because their appraisals are coming in, 5-10% short. And then on top of that, rates are extremely high. So instead of having your value confirmed and an extremely low rate that's completely out of market, people are actually increasing the risk. So I would encourage anybody to reach out to the clients. If you know anybody with a pre-sale, put them in touch with us right away. Just wanted to also quickly touch on we always have promotions. We have a winter, spring, summer, and sometimes we have a fall. So we pretty much have one every season. This one's actually quite a good one because of the amount. It's industry leading, of course. So if you know someone that has a renewal coming up or wants to get a pre-approval, we can give them up to $4,200 in cash back and hold a rate for 130 days. So again, it just comes down to what Vic said. What's the harm? One, we maybe give the client a bunch of cash for renewing their mortgage at a lower rate. I mean, I think that's just a huge benefit. But on top of that, we also look at costs to transfer. We can also avoid some of those too, in addition to the cashback. So depending on the client situation, there's more bonuses we can tack on. So, I mean, that's basically the presentation. So I'll hand it back to Alex.
Oh, yes. I'll just jump in while Alex gets back on, McNeil. I just want to say that's superb. We really wanted the people on this call, our advisors, to see how you as a mortgage specialist would talk to them, how you would do a presentation to them, which is, to me, this is your wholesaler hat that you did today, as well as how you would prepare and communicate with the client. I think this is a huge advantage for BMO, that the mortgage specialists are both wholesalers and you're the retail, lending specialist as well. You're actually doing the application. You're both roles in one. And I think that's a huge, huge benefit to our advisors to see that the wholesaler that they're dealing with is also the same person that's going to be dealing with their client. And actually, I think that's probably one of the top reasons why, unless I'm proven incorrect, I believe McNeil has the most number of deals from a single IDC contracted advisor in British Columbia, which is about 12. And that really perked my ears when I heard that. And McNeil, thank you so much for being on the call today. So Alex, back to you.
Great. Thanks for those comments, Vic, and great presentation, McNeil. And I just wanted to add one thing quickly before I bring Allan on. IDC Worldsource, we were actually on the pilot project with BMO back in the day when it was specialized lending. And so it probably goes back at least 6 years. And from my experience talking to advisors before Vic joined, one objection I would get is, why would I want to refer my clients to BMO? They're going to cross-sell, cross-pollinate, whatever. And we too had concerns about it. That's why we ran it as a pilot project. And fast forward to 6-7 years later, I can tell you that we have not had one incident of BMO calling any of the mortgage referral clients. So I just wanted to reinforce what McNeil said, so you can, definitely feel comfortable sending your referrals to BMO. So thanks again, McNeil. Okay, so now we're moving on to Allan McNeil with Equitable Bank. Again, my pleasure to introduce Allan. Allan is a top authority in the field on why your clients need a second opinion from Equitable Bank if they're considering a reverse mortgage. Allan is Equitable Bank's reverse mortgage expert from Ontario, basically Ontario West. He's based in Kitchener, and he has the responsibility of Equitable Bank's key accounts, including IDC Worldsource. He has over a decade of experience specializing in reverse mortgages. And I found this quite interesting when I read his bio. He's actually one of only a handful of reverse mortgage professionals that have worked for both major providers, right? CHIP, Home Equity Bank, and of course now Equitable Bank. Allan has 30 years experience in the financial services industry. He's been insurance licensed in the past, so he understands our business, and he understands how reverse mortgages can be utilized well as a financial tool for life insurance and wealth professionals, again, as a very vital retirement tool. So please join me in welcoming Allan McNeil from Equitable Bank. And over to you, Allan, and thank you.
Well, thank you, Alex. Thank you for the fine introduction, and thank you, Vic, for inviting me to talk today. What I want to do today is I want to go through, a presentation and talk to you about, reverse mortgages as they are today in today's environment. You may not be overly familiar with reverse mortgages. I'm going to give just a very quick overview on what they are. But then I'm going to talk about today's environment, what clients are doing, and why your consultation and ultimate referral for a client on a reverse mortgage may be of import to you. And please take note of my contact information, phone number, email. I love phone calls in particular. Reverse mortgages have a lot of subtleties associated with them. And any opportunity I have to talk on one question brings up often a series of questions and things you may want to know. So please never hesitate to reach out and talk to me. But very glad, Vic, that I'm a part of the IDC network of suppliers out there, and particularly with the reverse mortgage being provided by, Equitable Bank. So a reverse mortgage is very simply, it allows Canadians to convert dormant home equity into tax and payment-free cash. In fact, that's the hallmark of the reverse mortgage, is that no payments are required to when it comes due. And that's the fact that there is no payment associated with reverse mortgage. There can be, by the way, interest payments can be made, and once a year, up to 10% of the principal can also be paid. But most clients do not pay anything. And that's where it really starts to become, after all, then a wealth solution. It helps cash flows for seniors who have a lot of equity tied up in their home, but haven't had enough saved for retirement. Quickly, clients continue to own their home. We are just simply a mortgage holder. You might also be very much wanting to know, part of our underwriting structure is to determining the loan to value by the age of the youngest client. And what that does is that allows us to help preserve equity in the home. We're not going to lend the same way to a 55-year-old as we would a 90-year-old. Okay, and in fact, I'm working on a file with an agent right now for a client who is 96. But the other important aspect of a reverse mortgage is that the qualification for it is much easier. Of course, of stress testing. When we talk about stress testing in this marketplace, we're often thinking of a first-time home buyer who's not at their peak earning potential, but retirees are very much in that same boat. They're on a fraction of their former income, and they're not qualifying for the credit that they necessarily need to be able to enjoy a comfortable retirement. But I'm always happy to talk more about reverse mortgages and how they work, but the hallmark of the required. So why are they in demand today? And suiting up with the theme, I really want to talk more about the inflation and interest rates, out there, and how they're affecting seniors, eroding their cash flow. They're on fixed incomes, Canada Pension, OAS, guaranteed income supplement isn't keeping up with inflation, and their purchasing power is eroding. Yet a lot of these homeowners have $1 trillion. Seniors have over $1 trillion of dormant home equity out there. You have $1 million home, you can't go to Canadian Tire, you can't take a brick to buy bread. But if you had a $500,000 home and $500,000 in RIP, you're living a much more comfortable retirement. And a reverse mortgage is really trying to balance that out for those who weren't able to save quite enough for their entire retirement lifespan. Now, when rates went up, our business slowed, just like any other mortgage product. We slowed, but we bounced back quickly because of the pressures of higher rates of what clients were experiencing with their payments increasing significantly on their mortgage as it came for renewal, or more specifically on secured lines of credit. In fact, I was working with a mortgage broker yesterday talking about one of the clients he was working with. And this client, because of the pressure of inflation and increasing interest rates, is really only going to the grocery store, buying what's absolutely needed, and mentioned she treats herself to the bruised bananas when they're on sale. Now, I don't know about you, but buying bruised bananas, in retirement isn't my way of having a comfortable retirement. And we have seen, quite a bit of growth in this market. We, 2 years ago, were predicting 10% year-over-year growth in the Canadian reverse mortgage market. Last year, we've experienced 40% growth. Financial planners for years have been ringing the bell that Canadians just haven't been saving enough. And we've hit the market environment where that's really rung true. So you might want to ask yourself how your clients are faring. So we talked about prime. I think Vic mentioned prime at 6.7 today. Just back on March 2nd, it was at 245, right? And it started its mild, slow rise up to today's rate of 6.7. So a lot of seniors have had lines of credits put in place, to help finance their retirement and have availability. And if you think about a $200,000 line of credit, may have been fairly affordable early on, back in, say, around March 2nd of 2022, $200,000 might cost you $491 a month of interest charges. But today, with the growing of the interest rates, that same line of credit now has a payment of $1,200. That's quite an increase, $709 a month. It's 241% of an increase. These clients, if they have savings with you, if they have RIFs with you, they're looking at drawing more. Now they're paying excess in taxes. The money is not lasting as long as what it was projected for. So this is a real crunch. But if you compare that to the reverse mortgage payment, yes, our rates have the same types of forces on them as the regular mortgages do. Our rates went up as well. But for our clients, our payments have stayed at zero. Their affordability to stay in their home, to not deplete their retirement savings too early, has remained perfected. And they think that is critical. When seniors lose a spouse, income comes down. And banks start calling up when payments go up like this. I work with clients who have gotten calls on their line of credit saying, unfortunately, we want to term it out. We want to reduce the limit. And that's causing a lot of stress on seniors who do have a lot of equity in their home. And their home is free and clear, by the way, because they've wanted to protect it. That way of protecting it was to have no mortgage, and they thought with no mortgage payment, perhaps Canada Pension and OAS would take care of them. But I think we're finding out that's not quite the case. Now, these are the current reverse mortgage rates. Reverse mortgage rates are always going to be higher than standard mortgage rates. And it's really pretty simple. It's not a risk factor. We give no negative equity guarantee. We're very comfortable with the risk on a reverse mortgage. You don't get that on any other lending product, right? But we do give a no negative equity guarantee simply because we're very comfortable with the modest way that we go about lending. So rates will always be higher, not because of the risk, but because there is no income received from the client on a monthly basis, right? Clients can be in their home 5, 10, 15, 20, 25 years, 30 years without ever having made a payment. So we're deferring all that income. And because we defer that income, the interest rate is always going to have to pay a little bit of a premium in the end. Now, when I say our rates are lower, when you look at our 1-year fixed rate special right now, we're actually better than a variable rate product out there. However, I will concede that's a very rare market opportunity that if you have a client who you're thinking of, you may want to seize upon as soon as possible. But that's a very rare opportunity where this happens. In a normal market, all of our rates will be higher than a regular mortgage. And when you think about that too, perhaps the other way of structuring it from more of a wealth professional's point of view, if I had some monies for investment and I was coming in to see you and I asked about, well, I could either get a product where it pays me my income or my interest monthly or on maturity. You know what? Those have two different rates. And I'm probably going to get a better rate where I'm getting my interest at maturity or end of term than when I'm getting my income monthly. And that's really the real difference behind why the interest rates are going to be higher on reverse mortgages. Oops. So why is your referral important? This is critical. Think about where reverse mortgage banks, lenders are getting their business. By now, you've seen the TV ads. That's where a lot of reverse mortgage business is being driven to the other lender out in the marketplace. They've got their figure skater on TV, talking about reverse mortgages, and they're calling the lender directly. Okay, they're calling the incumbent, the CHIP reverse mortgage product, and dealing with them directly without getting any advice from their financial planner or even a mortgage broker. A lot of business is coming in through mortgage brokers. I work with them on routine. There's a lot of great mortgage brokers out there who do know the solution, who do care about the clients, but don't necessarily educate themselves about the client's overall financial situation. Right? So you very much want to be, aware that mortgage brokers are a very big piece of the market, but at least the client with them, as opposed to the TV ads, is getting a little bit of additional advice. If they're being referred by their bank, their banks in Canada right now have an exclusive referral agreement with the other lender. So there's no shopping going around. There's no, saying which of the reverse mortgage providers is better. It's going straight to the other lender who is dealing with them internally. There's a lot of research being done online, which is great. There's good information online. There's not so good information online. And a lot of them are working with their adult children to understand the reverse mortgage. And I always tell my brokers and the financial planners that I work with that you need to tell everybody about doing reverse mortgage, that you understand reverse mortgages, because it's not just the seniors who are 55 and older you want to talk to. It's because their children are also doing shopping on reverse mortgages, right? But too few are engaging their financial planners. To me, reverse mortgages should be in the wealth segment of the industry, not necessarily the lending industry. It is a financial planning tool. If you think about your own client base, you think about clients who are retiring. Do they have enough money for their to finance their retirement for the foreseeable future, for as long as they're going to need it? And that's not always the case. And that's really not being considered for all of those situations above. So your referral starts to become more and more important. And here's why. Here's just an example of the difference between, say, the two major competitors out there. Equitable Bank, you can see I'm using my 5-year rate in this illustration. My current 5-year rate is 6.74. for smaller markets, markets like Welland, Woodstock, Windsor, Wasaga Beach. You see my Ontario bias here and my affinity for some alliteration, with the W's. But in those type of markets, the rates that the other lender is offering is 7.49. You could quickly see how in 5 years, the growth, the additional interest charged on that, 15.4 after 5 years, $35,000 after 10 years, and $15,000 after $69,000 after 15 years. This is a real difference, a very significant difference. And if they're going, direct to the TV ads, if they're going to their banks, right, or if a broker's referring there, they're not aware of the additional cost that a reverse mortgage has when the rates are obviously significantly higher. So it's very critical. This is true, by the way, but in a much smaller extent for primary markets. We have a focus and a commitment to be the lowest rate provider. When we joined the industry, we reduced short mortgage rates, we drove them down, and we've been the lowest rate provider ever since. So it's good that to have a relationship with a provider who's got that type of a commitment. This, by the way, talking about equity preservation, this is a financial illustration that the team at Equitable Bank will review in detail with the client. And it shows, with the client, what the balance of the reverse mortgage would be every year, and then what the equity would be based on 5%, 3%, and 1%. Equity preservation is key to us. Clients not only want to have that for their children, but they may need to transition their living, and they're going to want to know that there's a nest egg there available for them if they have to sell to transition. We do, for a lot of our clients, we do anticipate that they're going to have equity left when they sell. And just a little rule of thumb that you may want to follow about the interest rates. Rule of thumb being that if a client borrowed 50% of the value of their home on a reverse mortgage, by the way, most don't, it's around 30%. But if they borrowed 50% on a reverse mortgage, the home only needs to appreciate at half of the interest rate for the home equity to pretty well stagnate throughout the life. It's not 100% accurate, it's a rule of thumb. So in this case, for this client who had $1 million home, had they borrowed $500,000 and the home appreciates at 3.37%, that equity throughout the life would remain pretty well balanced throughout, and they would have had access to that $500,000 throughout those 15 years, whether it's through paying out a mortgage and not paying a monthly mortgage payment, or whether they took that money to invest with you to create a monthly cash flow stream. So we have a really simple referral process, and we have a terrific referral fee. We pay 96 basis points on the amount advanced when it's advanced. Okay, so that's virtually a 1% finder's fee. And by the way, we do lend in Ontario, BC, Alberta, and Quebec, the major markets in those areas. And although we do lend in Alberta, unfortunately, regulations prevent for the referral fee to be paid in Alberta. Vic and I have been, bumping our heads together trying to figure out a way to resolve this, but it just seems like regulation has us. Now, referrals, very easy. Very simple, straightforward. First of all, you've got my contact information. You can call me to talk about a situation first, as I think Alex and I did, about what can be done. Get yourself a little bit comfortable. And if you like, give me instruction that when we speak with the client and the client wants you involved and you want to be involved, we can facilitate that. But the first thing you're going to do is make an online referral through our portal. We'll make sure that you've got this link. Very simple, only a couple of lines to fill in. You're telling us more about you than you are about the client. We'll send you out a partner agreement so we can pay you that 96 basis points. And then we'll contact the client. You'll have a dedicated professional reaching out, and I work closely with them on a daily basis. We start the underwriting process. Once we get an application, the guidelines are met, we're issuing a commitment letter, which the client would end up signing, and then we're going to instruct. And on every reverse mortgage, we do insist upon independent legal advice. And I think, that's really there to protect the client, to make sure there's no undue influence from them, from either us as the bank, their advisors, their family, or somebody else. We really want to make sure that the client's doing this for the right purposes. You're also going to want to consider, and I know I'm coming up to the end of my time, if you're thinking about what clients this is good for, clients running out of retirement funds, loss of a spouse and household income reducing, clients who suffered a critical illness without the protection, paying excess in taxes because they're accumulating too quickly to meet today's immediate needs, clients wishing to downsize but still want to buy. We do purchases, making major purchases such as a vehicle or a wedding or buying other real estate, and they don't want to cash in those other investments. Gifting for down payments, early inheritance. Those are always key features for why a reverse mortgage may suit your client. So please don't hesitate to reach out to me. I'm very happy to discuss reverse mortgages at any time. And we'll make sure that you've got all my contact information. Alex, back to you.
Great. Thanks, Allan. And thanks again, McNeil and Vic. And I believe we've been handling the questions as we go, but if there's any other questions, feel free to put them in the chat box. And I'm going to pass it over to Vic Raye to basically summarize and to close the presentation. And now I have coined the term for Vic Raye, off the cuff with Vic Raye. Here he is to close. Thank you all.
Awesome. Thank you, Alex. Allan, superb. Just a quick question came in just now. What is the highest borrowing limit as a percent?
59%. So you've seen the TV ads and they say get up to 55%. That's actually not true. 59% is the absolute highest. But caution, it's age banded. A 55-year-old is not getting 59%, right? So that's a very critical point. We do have an online calculator where very easy inputting the age of the youngest client, province, city, and home value will give you a quote.
All right. Very good. Allan, thank you very much. In conclusion, everyone, I said at the start that the appeal of banking today is stronger than it's ever been. The appeal of banking, what it's really all about is we're working as hard as we can to put this group of people together for you today to help you at what I like to call the front end, where you're looking to grow your practice, whether that's 4 or 5, a handful of really huge corporate insurance deals that you're trying to get, or whether you're trying to grow through volume and you need 100 clients a year for the next 10 years. Banking is a way to do that. It is a true strategy. Hey, nothing wrong with getting paid $3,000, $4,000, $5,000 a month as well for your mortgage referrals and your Advantage accounts. It's a win-win, and it's so super easy. I mean, I don't know how many times I said it took Alex 60 seconds when I told that story, but this is as easy as it gets. You pretty much have to go out of your way to avoid this area on purpose. It's just such a natural conversation with friends and family and your clients. So we encourage you to have those conversations. The people here are a great example of the top people that we are working at IDC to get in front of you and your clients. That's the beauty about banking. It helps you and it helps your clients. So, gentlemen, thank you very much for your help today. Allan, you got to trademark that line. You can't take a brick into the grocery store and trade it for a loaf of bread. That should be trademarked somehow. McNeil, thank you so much as well for your contribution. The fact again that we all got to see how you present to our advisors is fantastic. Should inspire a lot more advisors to do the same. Ladies and gentlemen, we're at 11:02, about the time that we started an hour ago. I see no more questions. Thank you very much. Have a great summer.
Thanks, everybody.
Thank you.